It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian stocks snapping a three-day winning streak. Risk appetite cooling ahead of the Fed chair's speech at Jackson Hole. The dollar steadies as the PBOC winds back yuan support. JD.com among the biggest losers as Bloomberg reveals its top shareholder, Walmart, plans to unload its stake for more than $3.7 billion. Plus, Santos shares fall to two-month lows as the oil and gas producer's first-half profit slides 19%. We're going to get the outlook first with CEO Kevin Gallagher. First, though, let's check in on how markets are doing. Avril Hong's in Singapore, looking like a risk-off day today, Avril.
Risk off, snapping a winning streak, perhaps unsurprising given the way Wall Street fared overnight. But don't forget, this was a really good run that we saw on stocks. And of course, this was fueled by the narrative that we're going to get the Fed and Jay Powell potentially on Friday at Jackson Hole, firing the starting gun in a way on the easing from the U.S. Central Bank. And this pullback we're seeing in stocks is also leading to what we're seeing in the U.S. dollar. I mean, it was a bit softer parts of today's session, pick up a bit now, but that yen and yuan weakness also seems to be returning. Of course, earlier in the session, we saw a bit of a rebound, and this was the investor reaction to the BOJ research notes that suggested the BOJ still sees this inflationary pressure persisting, potentially those rate hikes still on the table. But of course, the Chinese currency also in focus after the yuan fix from the PBOC today. That gap between the fix and estimates narrowing. We also saw a weaker fix versus estimate. I think this is for the first time in about a year. And if you flip the chart, it will show you how, this suggests in a way, given how we haven't seen this in a long time, that maybe Chinese authorities are thinking about the Chinese currency strength and what this would mean for exports, potential risk there. So let's get more on the markets with Tu Ha Chow, head of Asia Fixed Income at Robeco. Also joining us from Singapore is Bloomberg MLive Executive Editor Mark Cudmore. Mark, let's start with you first. Let's talk about Jackson Hole. I mean, there's all this anticipation building. There is a chance they disappoint the markets, but we also have perhaps a spanner in the works in the labor stats. Maybe there's going to be a downward revision on employment. Do you think the Fed is ready for all this? What kind of signals is it going to send?
So I think, first of all, we always get so excited about Jackson Hole, and nearly every time it's a disappointment. There's one year where it outperformed, but normally it's a disappointment. So I think this will, again, probably be an anticlimax. But there's a little bit of an interesting dynamic because I feel that the market is finally turning kind of bearish dollar on this idea that the fiscal deficit is going to continue to expand. You've still got a current account deficit, and yet you've got a very expensive currency. And I think people are worried that whatever happens in the election this year, it's probably going to be negative for the dollar. On the flip side, I feel like too many rate cuts are priced in at the front end of the curve in the US. We've still got almost 4 rate cuts priced in for this year. I think they'll be lucky if they get away with more than one rate cut. The US economy is still doing absolutely fine. So I think there's upside risk for yields, and yet it feels like people want to sell the dollar, which provides a very interesting dynamic into Jackson Hole. I do think the jobs thing's interesting. We get the data later on today, and I guess it's hard to preempt. We'll know that by tomorrow. We'll have a much more informed decision about what they say about that. I think the fact is, even if they revise down the number of jobs lost, well, they are going to revise down, but even if the scale of revisions is bigger than, at the higher end of the scale, I don't think it's problematic in terms of the US economy is still strong. It's still adding jobs. People get very excited because the jobs numbers are falling, but there's still overall job additions.
Mark, just as you're speaking there, we've got former US President Barack Obama taking the stage at the Democratic National Convention in Chicago, getting a rapturous welcome, as you might expect. But obviously, the next few weeks going to hold a fair bit of interest in terms of risk. What are you watching out for here?
Okay, I've got to give a clear disclaimer here on this, Paul. I thought August was going to be much more volatile. As you know, I'm very, very bullish this year. I'm very bullish the US economy. I'm very bullish stocks globally. Despite that bullishness, I was expecting that the kind of swoon we saw late July would lead to an August of volatility. It's been quite the opposite. We've been this straight line rally. So with the disclaimer that I've kind of got the last couple of weeks wrong, I'm still not convinced we're out of the woods yet on that volatility. And as you say, there are risks. There is Jackson Hole. We're going to get back into some more kind of heavy data at the start of September. We get people returning from the August holiday. So I am a little bit worried that, we've got one more swoon in us. And I think, probably the best way to look at that is through the lens of dollar yen. I am someone who remains a structural yen bear. I think yen still has more downside next year. But at the moment, I think the dollar yen is heading lower. I think people have parked the long-term fundamental negatives of the yen for the moment, and instead they're focusing on the kind of the nascent story of dollar bearishness. So dollar yen will have downside. I think we might get another scare in that kind of carry trade. That'll filter through to equities again. So yeah, I'm still nervous short term, but I expect stocks will be higher by the end of the year, and that'll be despite the fact that yields will be higher as well, because the Fed will not need to cut as much because the economy is doing absolutely fine in the US and everywhere.
Goldilocks scenario, Mark. Tuha, let's bring you into the conversation. Do you agree with that on dollar yen specifically?
I mean, we certainly definitely agree on the U.S. economy. I think you're right. We agree that there's too much bearishness kind of here, and I think it's because everyone wants more cuts than actually I think the Fed may need to do. So I think we're in agreement there. So we have, another kind of between now and next March about 3 kind of put in it. But we actually do see that actually there is now room for actually more than that, despite that being our view long term. And there are 2 reasons for that. I think when we look at the SME data and actually some of the credit data for, the less kind of prime part of the economy, that does look a lot weaker. Now we're watching for that, sometimes is not necessarily showed in the hype of the stocks, but actually that's still a very important part of the US economy to be watching out for.
And what about yen carry unwind? Yeah,
now I think that certainly some of that must have actually unwound already given the volatility we took. But I think what is interesting, and that Japan is a much more longer structural story. I think that the JGB market needs to find its way back into everyone's arena, and I think so. Therefore, I think structurally the BOJ will continue its move upwards on rates, and it's just about timing. I think hopefully this Friday they will vindicate with certainly some of the papers are pointing to the fact that this is a bigger, longer term story, and they will kind of move on that. And the volatility was, something that is not just about their move, but also they're very much on a US story there too.
I take your point on like the JGB market's becoming a real market again. For most of my trading career, I'm like, ignore that. It's a real market again. Yeah. So, but I'm curious what the end game is here. You've got an economy that is stagnant despite deeply negative real yields.
Yes.
It's got a massive debt pile. Now, I know it's domestically owned, but, if it can't really afford to hike rates for the economy significantly, but, it can hike a couple of times. That's fine. If we get to 1%, fine, no big problems. But it can't get positive real yields for the economy. It can't get positive real yields for its debt pile, which means that we kind of know that the long-term scenario, even if we get a few hikes and short-term we play yen bullishness, the long-term dynamic is Japan is going to keep deeply negative real yields for a long, long time to come. And surely that means the currency must be the outlet for that pressure.
I mean, definitely some of that correction has when you say, is actually kind of priced in. People are very, but if you think about, and maybe this is a more longer-term bullish kind of story in the yen, if you think of what they're doing in the stock market, if you look at their kind of big plans to kind of decarbonize and some of that technology, big impact if it works for the rest of Asia, it's maybe trying to say, hey, let's look at Japan as a productive economy again. Haven't thought that for a long time. I've also been looking at the markets for a long time. We've always could safely ignore. And if you even look around, people doing research on the Japanese JGB, there is very little. So I think this is a re-emergence of actually much more interesting than just yen, just JGBs. It's also about the stock market, and it's also about actually where does Japan as a capital market sit in the long-term horizon.
Thuha, we've seen some big moves in the yen this week, swinging between about 145 at the moment, 148 at the lower end. Now, if we look ahead to Friday, we've got CPI numbers, we've got Governor Ueda speaking to the Diet. Is the scene set for a fair bit of volatility to end up the week?
Yeah, but I think volatility is probably going to be it's just going to stay, because I say there's going to be conflicting views because the Japan story is just not that clear. And I think it's not going to be one. Yes, there's short-term and long-term dynamics. I think more bullish long-term, as probably that's where it's slightly, but volatility and short-term, that's going to be a dynamic play, both the dollar as well as the yen, not just a pure yen story. So yeah, volatility will entail.
And what is that going to mean for Asia central banks? I mean, they've been waiting with bated breath for the Fed to get things going. In terms of the order, the pecking order, who do you think is going to lag in easing? Today we got the BOT and BI.
Yeah, so I think BI seems like the data gives them some room. So I think given the repair, they probably want to wait and move quickly after the Fed does the first move. So I think that will help them out. The data's been helpful for them there. I think BOT is an interesting one. I think, again, the data is actually, it looks like the economy is picking up. They can also wait a bit longer. And I think the big issue there is going to be how the fiscal plays out with the new incoming government. But again, it looks like they have room to not be pushed into anything too early, given the uptick. And then I think the BOK, that's I think that, again, it's a mixed story, right? So you have the negativity on the housing prices, et cetera, and then maybe some inflationary from fresh food prices. But the deleveraging is still kind of ongoing. You have if the U.S. is slowing even in the labor side a bit, you're beginning to see some of that export kind of pressure taken out. So again, it's a bit of a mixed bag. And again, maybe they can also afford to wait a bit, wait for the Fed and then see how they calibrate themselves.
These views are based on the idea that the Fed will do at least 3 rate cuts by next March, okay? And I think you think there's potential for more, possibly, if it goes the other way. What happens if the Fed doesn't cut that much? Where is the biggest vulnerability? Just say, because I know when you kind of look at your probability forecast, you kind of go, okay, if this goes wrong, this will blow up. So let's just say we get away with 1, maybe 2 rate cuts by next March, but where yields shift higher as everyone goes, oh, the U.S. economy's fine, people are coping okay with this, inflation's still a problem. So U.S. rates along the curve are higher. Where is the vulnerable point in Asia?
I think the vulnerability is probably going to say more domestically economy, who actually we're all waiting for a weaker dollar. I mean, this is what the trade and any economy that actually is not going to get a weaker dollar is going to take some of that hit. And I think, that's why I think the repair is under worrying, and I think that's why they would try to keep yield high and wait to move only post the Fed and not take its lead. I think economies that benefit from the stronger U.S. economy, like the BOK, again, they will be able to have more leeway if the U.S. economy is a bit stronger. So I think that's how we kind of think about it. Those who are dependent on a strong or a weaker dollar for their policy, and those who can be actually much more domestic focused. Thailand, I think, much more domestic focused. Yeah.
We haven't even talked about the PBOC yet. What is your sense of the signals it's sending through the fix and how it's viewing what's happening in the U.S.?
I think it's a really tough position for the PBOC, because I think on the one hand they're having to deal with stability and the currency, and at the same time the domestic economy. It seems like priority is shifting to domestic economy right now, given all the external pressure. We said the tariff issue and the mirror, the policies that actually just is not pushing up domestic consumption, property. I think for them, they're going to be much more to try to lean to kind of support the economy, moving things that direction in terms of easing policies.
Really tricky. Piling on to the vulnerabilities and risks for the rest of the year as well. Yeah. Tuha, great to get your insights. Tuha Chow of Robeco, as well as our very own MLive Executive Editor, Mark Cudmore. Thank you to both. Back to you, Paul.
All right, thanks very much, Avril, Mark, Tuha as well. Still to come on Bloomberg Markets Asia, we're going to be speaking live and first with the CEO of Australian gas major Santos after they reported a first half profit miss. Right now, though, we've got former President Barack Obama speaking to the Democratic National Convention in Chicago. He's having a terrific time. The crowd's really eating it up. Barack Obama saying the torch has been passed. Now it's time for us to fight in the America that we believe in. And make no mistake, it will be a fight. Barack Obama there making remarks to the DNC.
We've seen that movie before, and we all know that the sequel is usually worse. America's ready for a new chapter. America's ready for a better story. We are ready for a President Kamala Harris. And Kamala Harris is ready for the job. This is a person who has spent her life fighting on behalf of people.
Live pictures here of former President Barack Obama speaking to the Democratic National Convention in Chicago. Let's have a quick listen.
In Governor Tim Walz. Let me tell you something. Let me tell you something. I love this guy. Tim is the kind of person who should be in politics. Born in a small town, served his country, taught kids, coached football, took care of his neighbors. He knows who he is, and he knows what's important. You can tell those flannel shirts he wears don't come from some political consultant. They come from his closet, and they have been through some stuff. They have been through some stuff. That's right. Together, Kamala and Tim have kept faith with America's central story. A story that says we are all created equal. All of us endowed with certain inalienable rights, that everyone deserves a chance, that even when we don't agree with each other, we can find a way to live with each other. That's Kamala's vision. That's Tim's vision. That's the Democratic Party's vision. And our job over the next 11 weeks is to convince as many people as possible to vote for that vision. Now, it won't be easy. The other side knows it's easier to play on people's fears and cynicism, always has been. They will tell you that...
All right, let's leave Chicago there. Barack Obama addressing the Democratic National Convention, and they are enjoying every word. All right, well, we've got shares of JD.com falling in Hong Kong right now, off a little bit more than 10%. This is as sources tell us that Walmart is exiting its stake in the company. Let's get more with our tech reporter, Annabelle Drewlers. So, Belle, we're hearing the stock's being offered at a discount. What's the rationale here?
Yeah, that's right, Paul. It could be as much as a 12% discount to yesterday's close. That's, again, what we're hearing from sources here about the marketed range for that stock. The rationale really seems to be around Walmart and its vision for how it operates in China. So it's had this stake in JD.com going back to 2016. But you think about all the changes that we've seen in the retail space since then. Not only is the macro environment looking really challenged, there's got consumers that are very wary and nervous to put their hand into their wallets. But then at the same time, you've also got intense competition, the likes of Alibaba, PDD. And so it's a very difficult environment for JD.com to be operating in. So this is what Walmart could be thinking about here. Where is it operating best and where are its bright spots in China? And that really does seem to be at least its Sam's Club, for instance, that offers premium goods with a membership model. Again, this is about refocusing. Walmart could be exiting here, raising around $3.74 billion, looking perhaps to use that money elsewhere, but all according to sources at this point in time.
Challenging environment, Belle, for EV makers as well amid the price war. What are you seeing in terms of XPeng? I mean, we've got its earnings. There's pressure on the margin. How bad is it going to look going forward?
Yeah, again, as you say, looking forward, it's really about the guidance and what came through with those numbers overnight, because there was a lot of caution put over those. Actually, in the second quarter, we still saw a loss, but that loss sort of narrowed a bit better than what analysts had been expecting. But it was really, as you say, all about the forecast. And what do we see signaled there? We did actually see more deliveries coming through, but what was important is that projected revenue has fallen or was well below predictions. So basically, XPeng isn't making as much money per vehicle as had been hoped. And again, that speaks to that competitive environment inside China. You've got not only a weaker macro environment, sluggish EV sales, but you've also got dozens of new entrants and models coming into the space.
Belle, we've also got Xiaomi and Geely in focus. Results due later on. What are we watching out for there?
Yeah, well, Xiaomi is particularly interesting because when you talk about that EV competition that we're seeing, it is a new entrant in the space. And actually, in this latest quarter, we could have seen its new EV sales starting to help its revenue generation, because our Bloomberg economics team or intelligence team is saying it could have driven 6 billion yuan of profits in the second quarter. So that's something that could have helped. It's really, of course, still about more of the consumer electronics business. Smartphones should be making up around 45 or 46 billion yuan of revenue. The broader estimate is for 87 billion yuan of revenue as well. So could see a bit of recovery coming through there. As well, the other one to note is Geely, and again, automaker here. Could have seen better numbers coming through, higher shipments, better export figures. The focus as well on that tariff risk, and that could really be particular attention on one of its subsidiaries, Zeekr, whether it's looking to build EVs in the EU to try and avoid those. But certainly a lot to be watching for this week, Paul.
Yeah, let's talk a little bit about that tariff risk. Interesting one, a further 9% on Tesla vehicles being imported into the EU that were made in China. We're seeing some of the suppliers, though, for Tesla just really shaking off that news. What is the risk around this?
Well, I mean, it's pretty much the biggest risk that's facing this sector right now, because you think about the competitive landscape in China. I think you've got around 140 different car makers in operation right now. There was some research out earlier saying that you can probably expect just around 19, 20 of those to be still solvent in a couple of years to come. So certainly a lot of concern. Tesla, actually, 9% is better than what had been predicted. But Tesla, of course, still has those operations in the EU as well.
All right, Belle, thanks so much. We've got shares of Santos, meanwhile, falling to the lowest in more than 2 months. This is after the Australian gas major reported profit for the first half of the year that missed our average analyst estimate, a net income falling 19%. The company's struggling here with declining production, lower energy prices weighing on things as well. But let's bring in MD and CEO Kevin Gallagher for more. Kevin, thanks so much for your time today. What is a very busy day. So first half profit down. Some of these things are beyond your control, but the dividend went up almost 50% to 13 cents. Long term, I know you have this policy of returning 40% free cash flow to shareholders, but how sustainable is that going to be going forward?
Well, thank you for your question, and thanks for having me on this afternoon. Look, we're very pleased with the dividend, and in actual fact, I would describe the half-year results today as a very strong set of results. Our base business has generated very strong free cash flow, but particularly pleased with the progress on our major capital projects. And at this point in time, we're coming to the end of a very capital-intensive period for the company, with our Barossa project now 80% complete, our Pikka project 60% complete, and our Moomba carbon capture and storage project in the final stages of commissioning. And so we see ourselves coming out of this capital-intensive phase over the next year or so. I describe that like running a marathon and coming over that hill and seeing the sort of finishing line a couple of kilometres down the line. So we've got to stay focused and get over the line in the next 12 months or so, and then we should see our free cash flow generation and driven by stronger production driving much stronger returns for shareholders. And I think that record interim dividend was just a sign of the board's confidence in the long-term outlook for the company.
Yeah, I want to talk a little bit more about some of those projects that are about to bear fruit in just a moment. But before we get into that, what is your outlook for the second half, not just in terms of prices, but also demand and your own production and profitability for the next 6 months?
Well, look, I mean, I can't, I've given up being a predictor of oil and gas prices in the external environment, other than to say that we tend to focus on what we can control, which is cost of supply. And we'll stay very focused on driving our production costs down. The first half saw some one-off impacts to those costs as a result, particularly of severe weather events in our onshore business here in Australia. Second half, I see production being very similar to that of the first half, and provided prices hold up, we should see a fairly consistent second half of the year. And hopefully we see more progress on those projects so that, when we come to the full year results, we're even closer to the start of those strong cash flows coming in from those new investments.
Yeah, well, let's talk about some of those new investments now. You mentioned the Barossa project. That's about 300 kilometres offshore in the Northern Territory, for those viewers unfamiliar with it. Now, I know you've confirmed that production on track for next year. What sort of specifics can you tell us around that, and how confident are you that all the litigation is now behind you?
Well, I mean, the good news about the project is now 80% complete. So in the last, or should I say year to date, since we got through the big litigation case regarding the pipeline, we've resumed our drilling operations. We've now drilled and completed 3 of those wells, 3 out of 6 wells. The gas export pipeline, that was the pipeline that was held up due litigation. That is now completely installed and commissioned, and so you know, that along with the subsea infrastructure largely installed, and the FPSO up there in Singapore now has all 16 modules installed and is on track to sail away in the first quarter of 2025, and then we would be looking at that project starting up production around this time next year.
There's another project in Western Australia, the Dorado project. There's been a few delays now on a final investment decision there. How committed is Santos to this project? What more information do you need to have before you can have the confidence to give it that final investment decision?
Well, look, it's not just information. The Dorado is a world-class resource, and we're very excited about the prospectivity of that project. We're in we're going to FEED later this year, the front-end engineering design phase of the project, and then we'll work that project up to make it FID ready. And I would expect that to be FID ready sometime in 25, probably late 25. But Dorado will compete with other projects in our portfolio. We have Dorado, we have the Papua project in PNG, we've got the Narrabri domestic gas project here in the east coast of Australia, and of course we have the Bayu-Undan carbon capture and storage project. Now, all of these projects are in the engineering and design phases at this point in time, and at different levels of readiness. But ultimately, you know, we'll look at each project in isolation. They will compete with each other for capital, and that's what having a strong portfolio with lots of optionality provides for us. It's very important, however, going forward, that when Santos does FID these positions, our equity levels are at the right level in these assets, and that our CapEx commitments are within a very tight and very disciplined operating framework, so that we can continue to invest and grow the company, but at the same time still reap the benefits of our previous investments to allow us to return strong dividends to our shareholders throughout that cycle.
How would you describe the current regulatory environment in Australia, not just in terms of the regulation themselves, but the certainty as well, and how is that impacting your investment decisions?
Well, look, I mean, there's no doubt it's been tough over the last few years with rapid and quite a lot of changes in policy, whether that be the safeguard mechanism, domestic gas intervention, et cetera. However, I think, you know, at the end of the day, what I'm confident about is that Santos is developing a product the world needs. There is no doubt that over the last year and a half, we have seen governments, industries, and most commentators start to recognize the importance of gas, not only as a transition fuel, but as a destination fuel. The countries that have made the biggest inroads in reducing emissions are those that have switched from coal to gas as part of their energy mix. And so we see demand for gas remaining, and for LNG in particular, very strong beyond 2050. Santos' strategy is to really focus on decarbonising that gas portfolio, and being a real leader in building decarbonisation and carbon management services. And That's why one of the projects we're very excited about is our Moomba CCS project, which is in the final sort of commissioning stages and should come on soon. And that should capture up to 1.7 million tonnes per annum of CO2. And of course, we've got the Bayu-Undan CCS project we want to develop in the next few years as well. So in addition to building gas projects and focusing on supplying that much-needed gas and oil as well, but we're 85% gas. We're also building a decarbonisation project so that Santos can offer a very strong value proposition in the future, which is abated oil and gas products.
Kevin, just quickly before we let you go, I do have to ask, last December there was talk of a Woodside takeover. This year there have been some Middle Eastern players taking a look as well. Just quickly, what is your plan for ensuring shareholder value?
Well, look, I mean, it's about delivering on our projects. We have a myopic focus inside the company to deliver on these projects, which will bring through much stronger free cash flow along the way, continuing to build on a strong foundation of a world-class LNG portfolio. And if we keep doing that, I'm very confident we'll deliver a great value outcome for our shareholders. And it does not surprise me then that other people would be interested in that portfolio, but we'll take that as it comes. In the meantime, we'll focus on delivering on our strategy.
All right, Kevin Gallagher, Managing Director and CEO of Santos, thank you so much for joining us. I want to take you back briefly now to Chicago and the Democratic National Convention. We have former President Barack Obama addressing the crowd there, and they're both having a terrific time. We're getting a bit of a retrospective on what the Obama presidency was like. Let's have a listen in.
The other was a little old white lady born in a tiny town called Peru, Kansas. Now, I know there aren't that many people from Peru. And yet they shared a basic outlook on life. They were strong, smart, resourceful women, full of common sense, who, regardless of the barriers they encountered, and women growing up in the 40s and 50s and 60s, they encountered barriers. They still went about their business without fuss or complaint and provided an unshakable foundation of love for their children and their grandchildren. In that sense, they both represented an entire generation of working people who, through war and depression, discrimination and limited opportunity, helped build this country. A lot of them toiled every day at jobs that were often too small for them.
All right, Barack Obama there addressing the Democratic National Convention in Chicago. Let's bring in Bloomberg's Vonnie Quinn in Washington now. Vonnie, you get a real sense here that both for the former president and the crowd there at the DNC very much enjoying this moment. Can you talk to us about what's been going on day 2 of the convention?
First address who that Marianne is that he's talking about. That is his mother-in-law who died about 2 months ago, Michelle Obama's mother. And Michelle Obama, of course, had spoken before Barack Obama. And let me tell you, these two speeches have roused up this crowd like nothing else in the last 2 days that I've seen. Michelle Obama with a real call to action, saying that now is not the time for complacency, that this election needs to be won by a landslide, that there needs to be a real effort to get out and do something. That was the chant that went up in the United Center. It's really fascinating because on the one hand, you have a lot of excitement and, as Michelle Obama put it, you know, this idea, this exhilaration that there is an era of hope around the corner, but also fear that this might all go wrong if the action isn't enough when it comes to the election. 78 days away, and, you know, this country is still very clearly divided in two. And both Michelle Obama and Barack Obama have said now that it is going to be a very closely fought and close election.
We're also not yet getting this official press conference from Kamala. What's the delay? You know, what gives?
She has said she'll speak after the DNC, and we know that the first debate, April, is set for September 10th. So there'll be a little bit of a gap between, post-DNC days and September 10th, and that might be a good time for Kamala Harris to then come out. She'll be presumably enjoying a bump in the polls from the DNC. That's what typically happens. And maybe the thinking behind this is that she can capitalize on that, and that this convention will now have introduced her to more Americans than knew her before. And let me tell you, the anecdotes that were told previously by the second gentleman really were very affecting. They would have gone out to a lot of people who were curious about who Kamala Harris was and what blended family she was talking about when she would talk about her family. And they definitely got to know her through those anecdotes today from Doug Emhoff and others as well, of course. So perhaps that's the thinking behind it. And I should also point out that those who are doing the thinking are the staff from Barack Obama's campaigns, the winning staff, I should say. So, David Plouffe and people like that have been hired by the Harris campaign, and they're the only ones who have ever actually gotten a person of colour into the Oval Office. In this case, Barack Obama, perhaps in the next case, Kamala Harris. They have a lot of experience. They will be joining some of the Biden staff at Harris headquarters in Delaware. Remember, Biden was obviously headquartered there before he pulled out, but, that's what's likely going to be the next 75 days.
All right, Bloomberg's Vonnie Quinn there in Washington. Let's just get back to Chicago. Barack Obama wrapping up his comments there.
Hold firm to our convictions. We will elect Kamala Harris as the next president of the United States, and Tim Walz as the next vice president of the United States. We will elect leaders up and down the ballot who will fight for the hopeful, forward-looking America we all believe in. And together, we too will build a country that is more secure and more just, more equal, and more free. So let's get to work. God bless you. And God bless the United States of America.
Rousing speech there from former President Barack Obama to the Democratic National Convention in Chicago. Right, let's take a closer look now at things closer to home in Asia, how the yen, other currencies are faring. Avril Hong's taking a look at things. Avril.
Yeah, Paul, makes you wonder how politics might play out on the Japanese currency, with Ueda set to face Parliament on Friday. And this coincides, of course, with the dropping of the Japanese inflation data ahead of his appearance. Makes you wonder whether he's going to sound hawkish because the data supports it, or dovish to appease politicians. In the meantime, the Japanese currency is hovering at the 145.5 against the greenback. Flip the board, because, of course, this is a story of dollar weakness that is helping emerging market Asia currencies, and the ones that have been really benefiting this month are the rupiah, the ringgit, the baht, noticeably absent from some of the strength we're seeing in Asia currencies is the rupee. But overall, we're also seeing some of these domestic factors that are helping these Asia currencies along, say for the Indian currency. Let's take a closer look at ASEAN, because this is, of course, a major consumer market, an increasingly important production base in international supply chains, and intra-ASEAN trade accounts for the biggest share of imports and exports. And our next guest believes the region offers compelling opportunities for businesses with international growth ambitions. Joining us exclusively now is Amanda Murphy, Head of Commercial Banking for South and Southeast Asia at HSBC. So, Amanda, I want to know what you're hearing from clients in terms of ASEAN integration and how they are investing these businesses. Is it happening more within the region, or they're exploring opportunities outside of ASEAN as well?
So first of all, what we're hearing from clients is a real sense of positivity. We did a survey recently of 600 of the biggest corporates, and more than 9 out of 10 of them told us that they are more positive about the prospects for ASEAN this year than they were last year. And they were pretty positive last year. So that's even more positivity. And as you rightly say, the strength of the intra-ASEAN, the connectivity cannot be underestimated. We've been here 150 years as HSBC. We're in 6 of the biggest markets, and we're incredibly bullish about the opportunities that are there. Economists predict growth of somewhere between 4.3 and 4.5 this year, and that to grow even up to 5% next year. So there's a real opportunity there in live growth, and companies are seeing that. Of course, they're impacted by some of the headwinds. You've talked in the show before about interest rate and inflationary pressures, but the underlying trends, the FDI, the trade story, the demographics of the region, and the opportunities are certainly unquestionable there.
So how are you building out the business to support all this? Are you, adding headcount in this part of the world?
So we are, absolutely. So we're in 2021, we announced an investment program of $6 billion for Asia, of which South and Southeast Asia gets a very significant proportion of that. We're investing in our digital journeys to make it easier for clients and corporates to do business with us. We're investing in our people so they can support our customers, particularly in areas like the new economy, in sustainable finance. And of course, we're making our monies available for our customers. We launched a ASEAN Growth Fund this year. We have some new economies and venture debt funds in a number of the markets around the region. All of this as a way to help our customers achieve their potential.
You have any difficulties hiring the staff you need, particularly Mandarin-speaking staff?
So it's one of the areas that comes back as feedback from our clients time and again about the concern about can they get the right level of skills in the region. And we're quite invested in helping our own staff learn Mandarin where they need to. But it's an area that certainly when I do any talks at schools or something like that, I encourage people. The skill of having Mandarin, both to work in China and to work for Chinese corporates overseas, is really important.
I want to ask some questions about the region more broadly as well, specifically around higher US tariffs in the region. We've heard some news today that Chinese EVs are still soon going to face additional tariffs into the EU. How do you see this playing out in ASEAN? Who are the winners and the losers in these sorts of scenarios?
So I think when we look at EVs in particular, and EVs are a really important story for us, but let's come back a little bit maybe to some of the free trade agreements that we have in the region. And we've got probably some of the world's most comprehensive and advanced and sophisticated free trade agreements here in the region. And they're very important because they reduce tariffs, but equally, if not more importantly, they reduce red tape, which is also often the biggest blocker to having free trade. They also provide a certainty and a clarity to customers who are working and want to export to the region or export from the region. So really important that we see some of those free trade agreements. And we can think of some of them that are around. We have the CPTPP, which has really raised the standards, and countries like the UK want to get involved in that. We've also got the RCEP, which is very important as China moves up the value chain. You mentioned EVs, particularly in that space, very important there. And of course, there's a number of bilaterals here. Singapore has one with the EU. And we'll see that market continue to evolve as we go forward.
Clearing up the red tape is one thing, Amanda. What are you seeing in terms of when manufacturers think about realigning their supply chains? Do you see India as a competition for this part of the region?
Yeah, it's a great question. India, I'm not sure I would see it as a competition, but I see it as an incredible opportunity. India growth, we're predicting there this year to be in the region of 7.5%. And some really key themes are coming out of India. And we've got a good vantage point. We look after about 10% of the exports, FDI and foreign exchange in India. So for what our corporates, we're seeing from our corporates, increased acquisitions. We're seeing much more of a desire to be international, and they are definitely benefiting from changes to supply chain, most definitely. We know that some of the big MNCs globally, think something like Apple, they are diversifying their supply chain, and India has benefited from that. They're using more suppliers in India than ever before. They're also benefiting from some of the government policies around encouraging local manufacturing and moving up that value chain. And if I look at semiconductors as a good example of that, I think in India we've seen about $15 billion be invested there, 3 new semiconductor plants and the first ever lab. So again, good examples of where India is going, what the opportunities are there.
And overall for South and South Asia, for some of of the fast-growing companies. What are the funding challenges for these firms?
Yeah, you're absolutely right. There is a real funding challenge. It is real because we've got lots of fast-growing companies. But if we look at some of the funding that's been available for startups, funding in the first half this year has fallen to 1.6 billion, which is about 65% down on last year, which is a big difference. And even for the more mature companies where they're seeking IPO funding, funding for the first half this year is down 60%. So real challenges there. That's why we challenged ourselves, how can we come up with different models to provide funding to these companies? And looking at, banks typically look at historical methods of funding. What did you do last year? What's your track record? We're looking at what's the potential? What's the size of the market? What are your operational metrics? Who are the people involved with your company? What's the track record there? And taking on a very different view. Here in Singapore, we've partnered with companies like Caro and Atome, and they bring brilliant stories of everything we've talked about today, the interconnectivity of the region. If I think about Atome, they're using IP that's developed in China. Their first market was in Indonesia. They've expanded now to the Philippines, to Malaysia, and to Singapore, and they continue to thrive. And so this is the nature of the interconnectivity of the region.
And HSBC's role in facilitating the build-up of these businesses.
Without our customers, we don't have a role, so that's what we keep thinking to do.
Great to have you in the studio with a chat with us. Thank you very much. Amanda Murphy of HSBC.
Thank you very much.
Paul.
All right, let's have a look at the Indian market. It's just been up and running for a little bit over a minute at the moment. Got a very weak rupee at the moment, just closing in on 84 US. The Sensex, not too bad actually, considering some of the risk-off sentiment we're seeing elsewhere around the region, off by about 0.1%. We did hear from the RBI Governor, Shaktikanta Das, a little bit earlier, saying the focus still very much on inflation. It's got to show signs of settling around 4% sustainably before a rate cut can be considered. Still to come, India aiming for a slice of the global export pie as it pushes ahead with its largest, deepest and most expensive port to date. More from our Big Take next. This is Bloomberg. The world's biggest shipping centres are getting caught in the crossfire of intensifying geopolitical conflict. Today's Bloomberg Big Take looks at how ports have turned into strategic battlefields as global powers use them to defend their economic interests. Our conglomerates, media and telecom reporter PR Sanjay joins us now from Mumbai with a closer look at one of the key players in this battle. So, Sanjay, India is developing a massive new port project at Vadhavan. How's this port going to reshape India's maritime industry?
This is really big. Indian Prime Minister Narendra Modi will break ground on 30th August for building Vadhavan port, which will be one of the biggest port, which will be one of the 10 biggest, largest port in the world at one go. And the cost is around $9 billion. And this will have a natural depth of 20 meters depth, which can accommodate larger ships. So currently, most of the ships skip India because they don't have that kind of a natural shipping channel, natural draft. So they used to call in Dubai, Singapore, Salalah, etc. And this can handle at least 23 million TEUs, 20-foot equivalent units, which is like behemoth. It's going to be a mega port project for India, and it's going to be a pet project for Indian Prime Minister Narendra Modi.
How does this play into the Make in India initiative and Modi's larger plans?
That's a great question. Modi always believed in port-led economy. You would know that without mega ports, without large ports, with deep drafted ports, you can't have a grand manufacturing plan. So a country which would want to boost their local manufacturing, they should have this deep drafted port. And as I highlighted earlier, this have got a natural depth of 20 meters, and it can handle 23 million TEUs or container units. So this is going to be really big because you need to evacuate the cargo. You'll have to facilitate exports and imports if you want to be a great player in manufacturing. And Modi's grand vision is Make in India, and you need this mega ports, and Vadwan will be one of the game-changing for Indian maritime industry.
So, on that note, how is the global maritime industry evolving, and where's India fit on that global stage?
That's a good question. So in all countries, including India or be it Dubai, Singapore, or even for Antwerp, the port conglomerate, they're all looking to position themselves as an alternative to China. And a very interesting anecdote is, if you take top 10 larger ports or bigger ports in the world, and 7 are in China, and none of them are not in Asia or even Americas. So that gives you a clear picture. And even India is building a string of pearls, like ports across the coast, and it is also trying to build ports in Sri Lanka and other countries, including Israel. They're asking the corporates to develop ports, and you would know that China is pouring a lot of money into African ports as well. So every country is trying to position themselves as an alternative to China, and India is not left behind. They are trying to develop more ports, more bigger ports, mega ports, and they would want to Make in India program to fly high.
All right, Bloomberg conglomerates media and telecom reporter PR Sanjay. Plenty more to come. This is Bloomberg. Okay, it's a risk-off day, modestly so for most major markets around the Asia-Pacific today. Just a couple of stocks that we want to keep an eye on, though. JD.com really getting hammered today in Hong Kong. Stocks falling over concerns that Walmart is reportedly, according to Bloomberg, planning to sell its stake in JD.com. So we've got the Hang Seng Index more broadly down 2.1%. Quasar Technology also slumping more than 10%. Some disappointing advertising revenue there. Those shares in JD.com also we're seeing very, very heavy volume, up to 20 times normal volume on those shares being traded. Let's take a look at Korean EV makers as well, because we have been bringing you the story about how the EU is going to introduce an additional 9% tariff on Teslas imported from China. That's on top of the existing tariffs that they already suffer. But take a look at some of these Tesla suppliers. Shrugging off that bad news, we've got Samsung SDI up better than by almost 7% in Korea. LG Chem, LG Energy Solutions also performing very strongly. All right, that is it from Bloomberg Markets Asia. We've got Horizons, Middle East and Africa coming up next. This is Bloomberg.